Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the top 5 stocks to invest in renewable energy. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. The global economy is rapidly shifting towards cleaner energy sources, driven by climate concerns. Over $150 trillion is estimated to be invested in decarbonization over the next 30 years. Renewable energy like wind and solar power is crucial in this transition, currently providing 20% of United States electricity and experiencing rapid growth. Companies are prioritizing decarbonization, investing in renewables and entering power agreements. Governments are also boosting investment through legislation, like the $369 billion Inflation Reduction Act in the United States. In 2024, 5 leading renewable energy stocks will emerge as standout investment choices amid this growing trend. Investors seeking opportunities in the renewable energy sector should keep a close eye on these companies, as they represent some of the most promising investment prospects in the industry. Here are the top 5 stocks to invest in renewable energy. Starting off with number 1, Nextera Energy. Valued at $119.6 billion with a 0.47% stake in the market, it stands out as one of the globe's largest producers of wind and solar energy. The company generates power through its Florida utilities and its energy resources segment, which supplies electricity to other utilities and large corporate purchasers through power purchase agreements, PPAs. Few entities are as committed to renewable energy as Nextera Energy. In 2022, the company launched its Real Zero initiative, aiming to completely eradicate carbon emissions from its operations by 2045. This initiative entails a significant expansion of its solar energy and storage capabilities, along with the substitution of natural gas with green hydrogen and renewable natural gas in its power plants. Nextera has an impressive track record of generating value for its shareholders through investments in renewable energy. Over the past decade, it has delivered a total return exceeding 260%. This above-average growth rate has fueled robust investment returns. Nextera has increased its adjusted earnings per share (EPS) at a compound annual rate of 9.8% since 2012. Concurrently, it has raised its dividend at an annual rate of 11% during this period, extending its streak of consecutive growth to over 25 years. The company anticipates that its investments will continue to yield dividends for its shareholders. It projects that earnings will grow at or near its targeted range of 6% to 8% annually through at least 2026, driven by ongoing investments in renewable energy. Nextera also foresees approximately 10% annual growth in dividends through at least 2024. Additionally, it is expected to uphold one of the strongest balance sheets in the utility sector, providing the financial flexibility necessary for further expansion. Number 2, Brookfield Renewable. Valued at $5.1 billion, stands as a prominent force in the global renewable energy sector. Renowned for its extensive hydroelectric power output, expected to comprise half of its portfolio by 2023. The company has also been bolstering its wind, solar, and energy storage capabilities. Operating under long-term PPAs, Brookfield ensures a consistent revenue stream. With a solid performance history, Brookfield has achieved an impressive annualized total return of 16% since its establishment. This growth trajectory has been fueled by strategic acquisitions and development initiatives, resulting in a compound annual earnings increase of over 10% in the past decade. Consequently, the company has sustained 6% compound annual growth in dividend payments since 2014. Anticipating continued expansion, Brookfield foresees annual EPS growth exceeding 10% until 2028, propelled by its robust pipeline of renewable energy projects and further acquisitions. This earnings uptrend is poised to support a yearly dividend hike of 5% to 9%, positioning Brookfield as a top contender in the renewable energy dividend market. Moreover, the company is committed to maintaining a strong balance sheet, ensuring financial flexibility for future endeavors. Number 3, Clearway Energy. Valued at $4.9 billion, stands as a prominent leader in the United States renewable energy landscape, boasting an extensive portfolio of wind and solar energy assets complemented by highly efficient natural gas-powered facilities. The company secures its revenue through PPAs, ensuring steady cash flow. Having divested its thermal business in 2022, Clearway reaped $1.35 billion in cash, earmarked for bolstering its renewable energy endeavors. Through strategic acquisitions, Clearway is actively expanding its renewable energy footprint, enhancing its potential to deliver robust returns to investors. Thanks to these strategic moves, Clearway Energy foresees a substantial uptick in its dividend payout, aiming towards the upper limit of its annual growth target of 5% to 8% until at least 2026. Simultaneously, the company remains committed to maintaining a strong financial position. Positioned to seize emerging opportunities, Clearway Energy is poised to drive further growth in its renewable energy portfolio, offering significant value to its shareholders. Number 4. First Solar, valued at $15.7 billion, is known for its large-scale thin-film solar panels, which outperform other technologies by generating more energy. These panels are particularly suitable for big solar energy projects. Being a top player in the solar panel industry, First Solar is well-positioned to meet the rising demand. The company is actively expanding its production capacity to fulfill orders extending into 2030, ensuring steady revenue. First Solar's strong financial position allows for continuous growth. Despite heavy investments, it anticipates ending 2023 with $1.5 billion to $1.8 billion in net cash, providing flexibility for expansion. The construction of a new $1.1 billion manufacturing facility in Louisiana, slated to begin production in 2026, exemplifies this commitment. Moreover, First Solar can enhance its technology through acquisitions. For instance, in 2023, it acquired Evolar, a leading European thin-film company, to bolster its innovation capabilities in next-generation solar technology. Number 5. SolarEdge Technologies, valued at $3.9 billion, specializes in developing and manufacturing advanced inverter systems tailored for solar energy applications. These systems optimize the power output of solar panels, effectively reducing the overall energy generation costs. Comparable to First Solar, SolarEdge Technologies stands to gain significant advantages from the global surge in solar energy adoption. Expanding beyond its primary focus on inverters, the company has diversified its portfolio to include various intelligent energy solutions. This expansion has been facilitated by strategic acquisitions aimed at acquiring technology, expertise, and products catering to multiple energy market segments. These segments encompass solar energy, energy storage, electric vehicle charging infrastructure, battery technology, uninterruptible power supply systems, electric vehicle powertrains, and grid services. SolarEdge Technologies' expansion into smart energy solutions has been bolstered by its robust financial position. The company's core inverter business consistently yields profits and generates substantial cash flow. As of the second quarter of 2023, SolarEdge Technologies boasted nearly $900 million in net cash reserves, granting it the flexibility to pursue further growth opportunities and capitalize on the ongoing trend towards decarbonization. Investing in renewable energy stocks presents an enticing opportunity for long-term financial growth and stability. With the global economy shifting towards cleaner energy options to combat climate change, companies like Nextera Energy, Brookfield Renewable, Clearway Energy, First Solar, and SolarEdge Technologies are at the forefront of this transition, offering investors a chance to both profit and contribute to a sustainable future. These companies have demonstrated remarkable resilience and innovation in the renewable energy sector. Nextera Energy, for instance, is dedicated to eradicating carbon emissions from its operations by 2045 through initiatives like its Real Zero program, while Brookfield Renewable has strategically diversified its portfolio to include hydroelectric, wind, solar, and energy storage projects. Clearway Energy, on the other hand, has bolstered its renewable energy footprint through strategic acquisitions, and First Solar continues to lead with its cutting-edge thin-film solar panel technology. Furthermore, the financial outlook for these companies is promising. Nextera Energy has consistently delivered value to shareholders, with an impressive total return exceeding 260% over the past decade and anticipated earnings and dividend growth. Brookfield Renewable foresees substantial EPS growth propelled by its robust pipeline of projects, while Clearway Energy aims for continued dividend growth and a strong financial position. First Solar, with its significant net cash reserves, is well positioned for further expansion, and Solar Edge Technologies boasts a diverse portfolio and ample cash reserves to pursue growth opportunities. By aligning your investment portfolio with the renewable energy sector, you not only stand to benefit financially but also contribute to a more sustainable future for generations to come. If you found this video informative, please consider giving it a thumbs up and subscribing to our channel for more insightful investment content. Thank you for watching, and remember, your support helps us continue to bring you valuable insights. Until next time, take care and happy investing.